Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at two stocks, FirstCaribbean International for its 9-month period ended July 2019, as well as JMMB Group Limited for its first quarter ended June 30th, 2019. Differing results for both stocks. Let's take a look, and turning first to FirstCaribbean. For its 9-month period, as mentioned, ended July 2019, FirstCaribbean recorded earnings per share of just around the TT dollar equivalent of 50.3 cents, which was a 1.4% increase from the 49.6 cents per share recorded in the prior comparable period. Now, moving the results was an increase in total revenues of just around 5.7% from 2.9 billion TT dollar equivalent to just around $3.08 billion. Operating expenses also increased just around 5.1% from $1.9 billion to just around 2 billion TT dollar equivalent dollars. Income tax expenses did increase quite significantly from a credit in the prior comparable period of $19.7 million to just around $256 million in the 2019 period, and credit loss impairments actually swung from an expense to a credit from an expense of $218 million to just around a credit of $4 million TT equivalent. So significant one-off items impacting the results of FirstCaribbean, and according to the CEO of FirstCaribbean, adjusted net income, excluding or after adjusting rather for these one-off items, would have actually increased just around 11.1% from $846 to $940 million TT equivalent. Now, as we can see in terms of total revenue trends, it's been a nice positive upward trending movement for FirstCaribbean's total revenues over the past 4 or 5 comparable periods. In 2019, the 9-month period of 2019, net interest income would have increased from $2.05 billion to $2.13 billion, and net interest income accounts for just about 70% of FCI's total revenues, and operating income would have increased just around 10% from $859 to $900, just a shade under $950 million TT equivalent. Now, of some concern for FCI and FCI investors might be the company's exposure to the Bahamas, and indeed very tragic scenes and developments in Bahamas arising out of the impact of Hurricane Dorian. And for FirstCaribbean International, from its fiscal 2018 annual report, 31% of revenues are generated, in fact, from the Bahamas, and 29% of its loans are booked in the Bahamas as well. So investors should be keeping a close eye on developments of FirstCaribbean and the impact that it could have from its Bahamas exposure. Now, at a price of $8.50, the stock is trading at a price earnings multiple of just around 20 times, which is in excess or quite a significant amount above the 16 times of the banking sector. However, it has been offering a very attractive trailing dividend yield of 5.3%, inclusive of a special dividend. Excluding that special dividend, it's still a very healthy 4%, which is in line with the banking sector average. And importantly, FirstCaribbean pays its dividends in US dollars. So at that price of $8.50, with a fairly attractive dividend yield, but tempered by ongoing headwinds in its major operating jurisdictions, including the Bahamas and Barbados, Bourse maintains a neutral rating on FirstCaribbean. Turning to JMMB Group Limited, and for its first fiscal quarter ended June 30th, 2019, the company reported earnings per share of just around 3.3 cents, which was a 19.3% increase from the 2.8 cents recorded in the prior comparable period. Now, operating revenues were up quite an impressive 25.2% from $228 to $286 million. TT equivalent operating expenses also increased just around 15% from $164 to $188 million, and overall operating profits were up 51% from $65 million to just around $98 million. Tax expenses, though, did increase 181% from $12 to just around $36 million. And profit for the period did increase overall just around 17% from $46.9 to $54.8 million TT equivalent. When we look at the sources of operating revenue, we can see very nice increases all across the board. Net interest income in blue increased from 101 to 107. A very significant improvement in gains from securities trading, which is typically one of the more volatile sources of income, from 78 to 105 million. And net fees and commissions, as well as foreign exchange margins, also improved measurably. Now, when we take a look at the profit before tax and profit before tax margin trends, we see nice upward trend again, probably accruing to that very, very favorable investment markets and above average gains from securities trading. We see that profit before tax margins have increased from an average of around 25% to that 31.6% in the first quarter of 2020. Now, something very important developments for JMMB. They recently would have announced the 20% acquisition of a stake in the new Sagicor that's developing, and aligned to that will be an additional offering of shares, which would increase their total outstanding shares, if approved, by just about 20%. So there will be some dilutive impact, but that should be offset by the benefits from the acquisition of new Sagicor. At a price of $2.21, JMMB is trading at 18.1 times price to earnings, which is above the non-banking sector average of 12.4 times, and a fairly lofty valuation of 2.2 times market to book, which is above the 1.4 sector average, and well below the sector average in terms of dividend yield of 1.1% versus the 3.1% sector average. So based on growth and continuing acquisition activity, but tempered by fairly lofty valuations, Bourse maintains its neutral rating on JMMB. That's it for this week's edition. For more information, give us a call at 226-8773 or to Bourse. Email us at invest@boursefinancial.com or check us out on bourseinvestment.com. That's our website. Have yourselves a great investing week. This has been the Bourse Report.